of course, this morning so far, we are up sharply on both the major averages. Jeremy Siegel, Wharton School at the University of Pennsylvania, professor of finance, joins us now. Always good to have you, Jeremy. And you heard Sarah and I talking, I would assume, about sort of the broader economy. Just give me your take in terms of the market and that economy.
I think Sarah has it exactly right. I mean, the narrowing of tariffs talk is the major reason why we got this rally, I think, today and toward the end of last week. And the market does not like uncertain, wildly fluctuating, and potentially very high tariffs. It is willing to look towards the targeted tariffs, and that might actually be beneficial. So it has his fingers crossed for April 2nd. Trump calls it Liberation Day, but I think for the market, they're looking for Relief Day. Hopefully, and hopefully we don't get a bad surprise. But also, it is true we're not really seeing a lot of hard data that shows a slowing economy. I mean, we got these PMIs just a few minutes ago that were a little weak on manufacturing, surprisingly strong on services. Jobless claims are back in that sweet spot of 220,000, which doesn't show a weakening. It's the surveys. And I think that's the big question is, that big drop in surveys, and we get another survey this week, actually tomorrow, the Conference Board. Is that survey really going to lead to a downshift of consumer spending? Because I think a lot of the talk of that tariff did scare consumers, and higher prices. What does that mean? We're getting feedback from home builders, some of which I've already said, "Oh, you're going to charge 20% more for this and that," and that's a negative. And so, if we can quiet some of those fears, that certainly will be positive.
David Rosenberg weighing in. Retail sales is also hard data. And that reflected a weaker consumer spending environment. But to that point, Professor Siegel, that's where I was trying to figure out where the consumer is going. If the uncertainty really is impacting consumers' behavior and their psyches, should we be bracing for weaker consumer spending and a weaker economy? And is that what the market is trying to tell us?
Well, I think part of the market decline is that uncertainty. Now, if on April 2nd, we get news that it isn't so bad, it isn't going to cause big increases, that might calm the consumer. There's two sources of, I think, consumer fear. The major source is certainly tariffs and higher prices. There's also concern about layoffs. I mean, certainly in the federal area, and could it spread? There's almost nothing that could kill spending more than the fear of losing your job, either because of a tariff-induced recession or slowdown, or a direct cut by your company, or particularly the federal governments. You will not make large purchases. So that's the big question mark. And maybe if April 2nd, and if the press pitches it as, hey, this isn't so bad, we're going to negotiate some of their tariffs down on us, we're going to get bigger demand, and it's not going to have a big impact, we could see a turnaround in those fears that the consumer has that could bring the consumer confidence back towards where it was pre-tariff talk and what happened right after the Trump election.
But so, Jeremy, from a market perspective, I'm just curious then as to what you're seeing. The Mag 7, which led us for so long, obviously has not recently, but the multiples have come down rather sharply, and there's still a lot of questions as to whether demand, for example, for the hyperscalers and the like has really been impacted at all. I'm curious as to where you're sort of landing these days when you look at value.
Yeah, well, people ask me, we had that 10% drawdown. It's a little less now, certainly in the S&P. I said 80% was the tariff talk, but I think 20%, there are a few cracks in AI. It started with DeepSeek and BYD. Is China being able, and others, to implement AI without the highest end chip products? The word about I think that people fear most if they're big tech investors is commoditization. Is it going to be much cheaper to produce it? Now, that's going to benefit all of us, but it ain't going to benefit, a lot of the chip producers that use the AI. So I think there's there's still some concern, and that's part of the rotation, I think, that was from the Mag 7, which really were not that affected by the tariffs, but the question of, will they be able to maintain the margins that they once have? So that uncertainty, I think, is honestly still out there. We get almost every day China announcements that, hey, we're able to do this and that with cheaper chips. And again, good for the AI users, but not good for the AI chip producers.